What's up fam? Welcome to another episode of Trading Tips on the Milkers NAFX Academy channel, guys. So please don't forget to subscribe, don't forget to like, don't forget to share, and don't forget to comment down below. Without further ado, today I'm going to speak about patterns, right? Patterns. So basically, what are patterns? Patterns are resting areas, patterns are resting phases, whereby the market came from an impulsive phase and went straight into a pattern, a resting phase, to decide whether it's going to continue down or to reverse towards the upside, right? Now, basically today we're just going to look at continuation patterns, right? Continuation patterns. And we have two types of patterns that we look at. Two types. Basically is the structural pattern as well as the corrective pattern, right? So we are going to start with the corrective pattern, right? Because it's the most easiest to spot, the most easiest to trade, right? So this pattern basically just happens in an impulsive phase. You know, you have an impulse, you have the market pushing down towards the downside, and then you have some type of a 2 to 3 to 4, 5, 6 hours type of pattern that just continues. You see, those are the easiest patterns to spot. They are very easy to spot, easy to trade, easy to understand. You know, whenever you see this pattern, you go for it. You either take it on the break, stop loss above, or depending on how you want your stop loss or your risk and reward plan. You see, depending on that, that's how you place your stop loss, and then you target your target. That's it. This pattern is easy to trade and simple to spot as well. So if you go into an impulsive phase, all you look for is this pattern. That's all you look for. You look for that pattern. It most of the time happens in an impulsive phase, or it can happen whereby the market is in the pattern, like a larger pattern. For example, you see at the double top area there, it can happen around there when the market pushes down, you see, and then it gives you that type of pattern. And then you just take the pattern, you go with it. Because you're trading, you know that on the long term you're trading that pattern, but you saw your entry there within the pattern, so you take your trade. That's it for that pattern. So let's go to the next pattern. Another pattern that we see forming usually is the structural pattern, right? A structural pattern. What do I mean by a structural pattern? This pattern has structure to it. It forms highs and lows, goes back to the high, goes back to the low, goes back to the high, you know, that type of pattern. That's what I'm talking about. This pattern as well, it also forms in the impulsive phase. But this pattern determines most of the time whether the market is going to turn around or it's going to continue. But today we're not going to look at the reversal structural patterns. We're going to look at the continuation structural patterns, right? So basically this is it. It happens in an impulsive phase, right? When the market pushes down, the market starts losing momentum, and you'll be able to see it based on candlesticks. You'll be able to see the market losing momentum. The market will move such when it comes to an area of value, it's starting to lose momentum. Not the area of value, but rather forming an area of value. It loses momentum, and then you see it breaks to the upside. Not breaks, but it changes direction towards the upside, right? Starting to form, giving you structure. But the way it's moving up, it's like it's moving without momentum. It's like it's moving up a steep hill. It's struggling to maintain that it's struggling to maintain the upside momentum. It's struggling to maintain the momentum. Sorry, I was looking for the word momentum. Yeah, it's struggling to maintain the momentum, right? And you'll see it can't maintain it. So it will break back to the downside, changing direction, you see, coming back to the downside, and it struggles to maintain the momentum because it's moving into an area of value, right? There might be buyers who have buys placed there to push the market up. They are going to try to push the market up, but that's not what's going to happen, because this pattern is supported by the higher time frame structure. Obviously, it may be like it came from the ascending pattern, like as such. You see, it might have come from a ascending pattern as such. You see, that might have been what happened. So we are looking at that pattern as like that, and when it reaches this area, it can't sustain that momentum. So what happens is it moves back up, and the same thing happens that happens here. It can't sustain. It can't sustain. You see, and then it gives us this type of double top. So we have our double top that's formed, and then we have this double bottom that formed, right? So when it reaches this area, it immediately sells off, and it might give you a corrective pattern right there, you see, and then take you, and then another corrective pattern, and then take you with, you see. This is how this pattern happens, forms. It has structure to it. It has structure to it. It's a clear pattern. This pattern can happen. It can take weeks. It can take, really, that's no lie to it. It takes weeks to happen, to form. With this pattern, you have to be patient. You have to be relaxed. You have to sit back and focus, right? It's not such an easy pattern that you just go in and spot and, okay, I'm going to trade it, right? You might take your sell around here, the market goes, takes you out, break even. Or if you take a sell there, you look for it as it's just going to go down. There's a high possibility the market will just take you out, because you did not forecast that the market is going to form a structural pattern, right? So you need to know what type of things you are trading. You see, at Milker's NAFX Academy, we trade structural patterns, we trade corrective patterns, and we trade those, the opposite of those two, the reversals, right? We trade those. But when it comes to the reversals, we mostly look at the structural patterns, because we don't want to look at a corrective pattern as a reversal, because the corrective pattern can basically turn into a structural continuation pattern. What do I mean by that? The corrective pattern can form like this, you see. It gives us a correction in the form of a reversal, right? In the form of a reversal. And when it breaks out, it breaks, giving us our first high, and then it comes back, you see, and then that, you see. So when we look at this pattern, right, a reversal corrective pattern, there's a high possibility that it's just forming a larger continuation structural pattern, you see. It's not that it's going to form some type of reversal to change direction, you see. But if it forms as such, like this, we have that push down, and then we have this type, the reversal, right? But it has structure to it. It has structure to it. Then we can say, okay, now the market has really given us something that we might change direction. You see, the market has really given us something. Now this pattern has higher probability of reversing towards the upside than this simple corrective reversal, than that simple one, right? This one has higher probability than this one. This one might just form into this, you see. This one can just form into that. That's it, you see. There's nothing too deep about this. You just have to know what type of patterns you are looking for. So when you see this pattern happening on any type of pair or any kind of pair, don't be afraid, like, okay, no, I need to go in, I need to take this trade, we are going bullish. No, that's your FOMO kicking in, and that means you're going to trade with emotions. And when you trade with emotions, there's basically just one thing that's going to happen. You're going to lose your trading capital. You're going to lose every single cent in your account until your account hits negative. It can be negative, whatever amount, but it will hit negative. I'm telling you. So if you see that this type of pattern forming, sit back and relax and remember this video. Oh no, Shernwill the Milker talked about this. Okay, wait, there's something happening here. Okay, wait, I see this pattern forming. Let's wait. It might just form this. Then you just forecast it and save it. Forecast it and save it. You forecast your continuation. You see, you just forecast it. because these patterns will play with your emotions. I'm telling you, if it's not this one happening, if it's not this pattern happening as the reversal, right, then you don't take it at all. You don't go in for reversals if it's not a structural reversal. If it's not a structural reversal, ignore that pattern. Ignore it. It's going to get into your mind, play with your mind, and you are going to get in with FOMO into the markets, right? So this pattern might form like that, right? You would want to wait for it. If you missed the entry, right, at this third touch, right, if you missed the entry there, not saying we are trading third touches, but I'm saying if you missed an entry there, you can basically just wait for the structural continuation. You wait, the structural continuation forms, you see, and then you just get in. Instead of you just going into the market when you see the market in a certain direction, you just jump into a moving train. Jumping into a moving train is suicide. There's 100% that you will die. I did not say 90%, I said 100% that you will die, that you will blow your account, right? So wait for that patterns. You see, basically 4 patterns that we are looking at. Or let's not say 4, rather 3 patterns, because one pattern works in both scenarios, right? The corrective pattern works in both the bullish and the bearish. You see, if it's a reversal pattern, structural reversal, the corrective pattern works in its favor. If it's a bullish continuation, actually a bearish continuation, if it's a bearish continuation or a bearish reversal such as this, the corrective pattern works in its favor too. Okay, now this pattern, the reversal, right, it works as a reversal for the bearish side as well. It works as a bearish reversal as well. It works as a bullish reversal as well. This structural continuation works as a structural continuation in both sides. It just depends on the direction, the higher time frame direction, right? If the higher time frame is bearish, then you know you're looking at structural bearish patterns, corrective bearish patterns. You see, if it's bullish, you look at bullish structural patterns, bullish corrective patterns. That's it. There's nothing much to stress about it. That's just basically it. Just to take you guys through it again, it's just 2 patterns that form. Not 2, but rather, let's say the reversals. It's the reversals, the continuations. Yeah, basically just 2 patterns that we are looking at, as I said in the beginning. 2 patterns. It's basically just 2 patterns. It can either be this one, the structural reversal, right, or the bearish reversal. But it has to be structure to it. I'm just drawing out. It's not that perfect, but I'm drawing it out. Okay, it either that, the structural, right, and then it's what? Then it's this, the continuation, the corrective continuation, you know, just the corrective continuation. You see, it's just 2 patterns in the opposite directions. It's just the same one, and then you just have the larger one that has structure to it. You see, just that one, as well as this one. Okay, let's not say 2 patterns, let's say rather 3 patterns, okay, because it's the 2 continuations and the reversals, right? 2 continuations, 3 patterns basically that we are looking at. 3 patterns, because this is one set. This is one set of patterns in one direction. This is another set of patterns in one direction. You see, it's another set of patterns in one direction. So let's go to Bitcoin, just to show you guys what we have been talking about, right? You see what I said. When you see this pattern forming, the reversal structure, the corrective reversal, don't take it as no, the market has changed direction, it's going up, right? Don't take it as that at all. Take it, okay, no, the market is forming a larger structural continuation pattern, as I forecasted it out here. You see, I forecasted Bitcoin as this, because this has no structure to it. This is just corrective reversal, corrective reversal. Keep in mind that the higher time frame supports our sell. The higher time frame supports it. The higher time frame supports our sell. This is Bitcoin, right? See, this is Bitcoin. Now you see this reversal at the top. Now that one has structure to it. That one counts as a reversal, right? That one you can say it's a reversal because there is structure to it. You can see there is clear structure to it. Clear. There's beautiful, that push up, and then you see the structure. You see that structure. You see that structure. Structural reversal. That's a structural reversal, right? And then you have our first, which is this, a structural continuation. You also have the corrective continuation, which is that. You see the corrective continuation there. Corrective continuation there. It has kinda little structure to it, a little, because it have that reversal and then the same. You see a little structure to it, little structure. But then the real structural continuation is this one, because you have that, you see, and then you have that just to push down. You see the difference between the patterns. That's a structural pattern, structural pattern, a corrective pattern, and a structural reversal. And then you get a corrective reversal, right? A corrective reversal. Nothing deep, nothing deep. It's simple. As I said, keep in mind, when the market forms a corrective reversal in a dominating direction, let's say like this is bearish, the dominating direction is bearish, right? The market formed a structural reversal here. Structural reversal, not structural, but excuse me for that, a corrective reversal, right? Keep in mind that it's just forming a structural continuation. We forecasted it out, and this is a pattern that you will, I'm telling you, you need to be patient with this pattern. A structural pattern is a pattern that can pay you a lot, because the momentum that's building up is amazing. You see, you have to be patient. It has to form. And our entry would be if it gives us a corrective continuation within that structural continuation. If we get a corrective continuation, we take that trade without a doubt. We will take it. We will sell it. This is us looking at gold, not gold, but Bitcoin as a sell. We forecasted it as that. Like I'm telling you guys, why are we looking at Bitcoin as a sell? We haven't had a structural reversal yet. There's been no structural reversal. We had one corrective reversal, right? And then we had multiple structural continuations towards the downside, corrective continuations towards the downside, structural reversal towards the downside. With all of that, you tell me you want to buy Bitcoin. Actually, I don't know what you are basically trading, but it does not seem that like you are trading something that you know that you're trading, or that you understand what you're doing. For us, we understand what we are doing, and we understand what we want. We want the market to give us a structural continuation, as explained throughout the examples I showed you guys. We want a structural continuation to form, and that means Bitcoin, we might not trade it for the coming weeks, because it's forming the structural continuation, right? That's what we forecast, a structural continuation. These are the things that are taught throughout the course, but I'm not going to go into the course or the academy. I'm just giving you tips on how to spot your patterns correctly, and how to trade valid patterns and high probable patterns in your direction that's given to you by a higher time frame. As I said, everything built on everything. Every reason has a reason for a reason. You have a reason for why you are trading. Trading has a reason why it's there. The market has a reason why it exists. You see, it builds on everything. Okay, then I just made up some things there, but it kind of makes sense if you think about it. Everything has a reason for everything. The reason this is forming is because of a corrective reversal. The reason it's also forming It's because we have momentum to the downside. You see? Reasons towards reason. Reason one, why are you looking for a corrective continuation towards the downside? Because we have the higher structure supporting this bearish move. Reason two, we have multiple corrective patterns and structural patterns that support it as well. Reason three, we have strong momentum towards the downside. You see? Four, you can keep on adding reasons. Why? Because we forecasted it. You see? That's you just adding your reasons. And this is how we're looking at Bitcoin. Right? We're looking at Bitcoin as a cell, structural pattern forming. Right? We're looking at it as a cell having a structural pattern that forms, right? Now these things that I just taught you guys, these tips that I just gave you, these are things that are given to the VIP members, right? That are given to our private members. But I decided, okay, I see so many people just trading every single flag they see. They might see something like this forming, a push down and then a reversal, and then they go in with like risking the whole account, barcodes as you guys trade. Some people trade. We don't basically trade that way. We used to trade it. We're not saying you are wrong for it, but our view changed, barcodes, and then they go in and they think it's a long-term buy, and then the market comes out, account is gone, and then they see this pattern forming like that, and then they lose out. You see, they lose out on such a beautiful pattern, and then they have these emotions kicking in. It's like a lot of things, depression, and it's not even a lie. When it comes to the psychology of this forex industry, there's a lot I can speak about, but this video is not based on that. But just keep in mind, you don't have to trade your whole money in one position. You don't have to risk your whole money in one trade, and that's if it's not even in your plan, right? But what I'm saying is focus and know what you're trading. Understand what the market is giving you. Understand the difference between structure and just corrective. You know, there is structure to something, and then there's just correction. Both of them are corrections, but one is just has corrective nature. It's not nature, but nature is another thing, another topic for another day. It's just a phase. You see, this is it's just corrective. This is structural, and between structure and just corrective, structure has control over just corrective. That's why I'm saying I'm expecting a structural pattern to form there on Bitcoin, right? So we are looking at the market in this way. Those are the patterns that we look at. Three patterns make up one package. It's either in the bullish direction or the bearish direction. It's the reversal, corrective reversal, not the corrective but structural reversal, the corrective continuation, structural continuation. Nonetheless, guys, this is your boy, your mentor, whatever you see me as, your partner, not your spouse, I'm not your boyfriend, not your girlfriend, what. No, I'm none of that. I'm just another guy in the markets trying to make a difference through my understanding and through my knowledge I have of the markets, because the market is a teacher. It keeps on teaching you every day. You have to be a student and keep on learning, right? So with this, I just want to say thank you guys for watching my video. Don't forget to subscribe, don't forget to share the video, don't forget to like it as well, and don't forget, most of all, don't forget to comment below, right? Don't forget to comment below. This is your boy signing out.